specifically on the forgiveness guidance and application that came out recently. Just want to thank you all for being here. We've had an opportunity to do a handful of these webinars, and appreciate the feedback we've received. The Paycheck Protection Program was launched at the end of March, and I know along with you all, we've been in a flurry of activity dealing with a lot of the ins and outs and ramifications of that, along with all the other developments as we've dealt with the virus and everything that comes with that. On April the 2nd, so just a few days really after the passage of the CARES Act, there was an interim final rule that the SBA issued, just for a little background, and buried within that rule was a statement that they intended to issue additional guidance specific to forgiveness, which when you get down to it is probably the most important part of the whole thing, essentially to turn these loans into government grants, you could say. So we have eagerly awaited that guidance up until this point, and a week ago today, the guidance was issued in the form of this Form 3508 application for forgiveness that was put out by SBA. It's unclear right now that there have been some indications that additional guidance in the form of an actual rule will be issued, but it is kind of unclear whether that's going to happen or not. I would say that as we talk through the Form 3508 and just the process of forgiveness, there were not necessarily any, I guess, major revelations in the form and in the application, but certainly we received some clarification on a number of points that people had questions regarding, as well as just some further clarification. There are some remaining questions, like there are with everything the SBA has put out on this program, and so we'll talk through some of those as well. We have also received a handful of questions from folks already. I believe we have the ability, as you go through this, to in the chat function to add questions or submit questions, so feel free to do that. We'll try to touch on some of those as part of the presentation today, and then if we do not get to those, we will follow up with an email out to address those once we're finished. One thing before we really get started, I just wanted to point out a client sent me earlier today a forgiveness calculator, which was an Excel spreadsheet that the AICPA has put out, and I believe is circulating around. That may be something to look for. If you'd like a copy, let me know, and I can just forward you what I've received. I'm not sure. We've not worked through it or vetted it, but I'm sure if the AICPA blessed it, it's probably fine. And I'm sure there are other spreadsheets like that are floating around for the forgiveness calculation. So with that, I'm going to turn it over to Blake Lewis, and Blake is going to talk through part of kind of the mechanics of the forgiveness process and the form, and then I'll come back in and hit on a few other areas. So Blake, over to you.
Thanks, Robert. So the application consists of 4 parts, and it's the forgiveness calculation form, Schedule A, the Schedule A worksheet, and the demographic information sheet. Now, you're only required to complete the first 3, but if you're so inclined, you can fill out the demographic information sheet as well. So generally, loan proceeds must be used in the 8-week period, or stated differently, the 56-day period immediately following the date the loan was dispersed by the lender. And we're going to refer to this period throughout as the covered period. So to make things easier, any borrower with a biweekly or more frequent payroll period may elect to calculate the eligible payroll cost using an 8-week period that begins with the first day of the first pay period following the loan disbursement date. This is referred to as the alternative payroll covered period. So for example, if the borrower received its loan on April 20th and the first pay period following its PPP loan is on April 26th, then the first day of the alternative payroll covered period is going to be April 26th rather than April 20th, and the last day of the alternative payroll covered period will be on Saturday, June 20th. So borrowers that pay payroll twice per month or monthly are not allowed to use this convention. Although the CARES Act allows the borrower to use the loan funds on a broader category of expenses. To be eligible for forgiveness, the funds have to be used on payroll, rent, utilities, and mortgage interest. So payroll costs include salaries, wages, commissions, tips, or similar compensation, vacation, parental, family, medical, or sick leave, and severance pay, group health care benefits, including insurance premiums, retirement benefits, state and local taxes assessed on compensation, and self-employment income paid to partners and partnerships and owner members of limited liability companies that are taxed as partnerships. Now, payroll costs do not include cash compensation to any employee in excess of $100,000 on an annualized basis for any individual prorated for the covered period. It also does not include the employer portion of FICA, Medicare, or unemployment tax. Amounts calculated for emergency sick leave credit or the family medical leave credit are not included. Health insurance premiums and retirement benefits for sole proprietors and independent principal place of residence is outside the United States isn't included. So the timing of payroll costs, we've had a lot of questions about this. So forgiveness is generally available for payroll costs paid and payroll costs incurred during the covered period, or if you're using the alternative payroll covered period. They're considered paid on the date that the borrower distributes the checks or originates the ACH credit transaction. Payroll costs are considered incurred on the day that the employee's pay is earned. Payroll costs incurred but not paid during the covered period are still eligible if they are paid on the next payroll date following the covered period. All other payroll costs not covered by the list that we just discussed must be paid during the covered period in order to be counted towards that forgiveness amount. So note on retirement plans, the paid and incurred rules do not require that a retirement plan contribution relate to a specific time period. This should mean that a borrower can pay contributions during the covered period that relate to other time periods, even if not earned with respect to that time period. We think there's sufficient support for a borrower to catch up on matching contributions for 2020 through the end of the year, but making matching contributions for a post-covered period time frame may be too aggressive, even if they're actually paid during that covered period. With respect to profit sharing contributions, in addition to those contributions being discretionary with the sponsor, most plans do contain a minimum hour requirement and or a requirement that employees be employed as of the last day of the plan year to receive an allocation. So we have some concern on how SBA would view a borrower accelerating profit sharing contributions when typically made after year end. So non-payroll costs. So, as we discussed, in order to be eligible for forgiveness, the loan must be spent on payroll and then certain non-payroll costs, which are limited to the following. That's interest on any mortgage obligation for real or personal property for loans incurred prior to February 15th. And you're not allowed to prepay any of these. Rent for leases in existence prior to February 15th. This includes equipment leases, copier leases, and vehicle leases used in the business. Utilities for services that began prior to February 15th. So this is limited to electric, gas, water, telephone, internet access, and transportation costs. So timing of non-payroll costs, all eligible non-payroll costs, they must either be paid during the covered period or incurred during the covered period and paid on the next regular billing date, even if that billing date is after the covered period. And the alternative payroll covered period does not apply to non-payroll costs. So this 75-25 rule that came out in the regulations is clarified in the loan application. So the loan forgiveness calculation form determines that forgiveness amount as the lesser of the PPP loan amount, the amount determined after any adjustments for full-time employee and salary wage reductions, an amount equal to the total payroll cost divided by 25. Basically, if payroll costs are less than 75% of eligible expenses, then a borrower will lose the benefit of forgiveness with respect to those excess non-payroll costs. So for the sake of example, let's assume that a borrower spent $120,000 on eligible expenses, but only $75,000 was spent on payroll costs. That would mean that his forgiveness amount would be limited to $100,000. So the forgiveness amount is also going to be reduced if the employer reduces the number of employees or the amount of wages or salaries. To determine how much the forgiveness amount will be reduced, you multiply the forgiveness amount by the following fraction. The numerator being the average number of full-time employees per month during the covered period, and the denominator being the average number of full-time equivalent employees per month between the following two periods. The borrower, in this case, chooses either the February 15th through June 30th of 2019 or the January 1st through February 29th date. So the application does confirm that a full-time employee is based on a 40-hour work week. To make this determination, the borrower can either use the average number of hours paid per week and divide that number by 40, rounding to the nearest tenth, or assign a 1 for each employee that works 40 hours or more per week and assign a 0.5 for all other employees. The amount of loan forgiveness will not be reduced in the following circumstances. If the reduction occurs between February 15th and April 2016, and by June 30th, the employer has eliminated this reduction. And the reduction in forgiveness for the reduction in number of employees will also not apply for any position for which a borrower made a good faith written offer to rehire the employee during the covered period or alternative payroll covered period, or for any employee who during the covered period or alternative payroll covered period was fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in their hours. So reduction in forgivable amount due to the reduction in salary or hourly wage. Under the CARES Act, for each employee making less than $100,000 annualized, loan forgiveness will be reduced on a dollar-for-dollar basis to the extent that any such employee's pay during that period is reduced by more than 25% of his or her total salary or wages during the most recent full quarter. The application simplifies the implementation of this rule. Instead of comparing the actual amount of pay for the 8-week period to the previous 12-week period, the application requires a comparison of the average pay of the employee over those time periods. Now, Robert, I'm going to give this back to you.
All right. Thanks, Blake. Hey, before going on, just to touch on a couple of things that Blake mentioned there. One of the slides dealt with the use of funds, and Blake noted that under the CARES Act, you can actually use a Paycheck Protection loan or loan funds for items beyond just the 4 categories of payroll and then the utilities and interest and rent, because the way the CARES Act works, it actually references other uses that are permissible under other SBA programs. So as an example, one of those is working capital. And so the way that ties in here is if you look at the forgiveness calculation form or the application, it notes that you're not required to include amounts for which you're not requesting forgiveness. So just to point out that a borrower could have a loan of $100,000, and if they wanted to hold back $20,000 with the understanding that that's not eligible for forgiveness, obviously, that they're not running the risk, I think, of some claim of fraud or anything like that, because the Act actually allows you to use loan proceeds for other purposes. So just keep that in mind. Let's see, another point on the retirement plan contributions. He mentioned profit sharing contributions, and that we have all discussed that internally here, and as Blake noted, would have some concerns as to how SBA may view accelerating a profit sharing contribution, say for the first 6 months of the year or whatever, however you would calculate that. There are practical implications, as Blake noted, with the last day rule and all those other ERISA points that are outside of my area. Even though there's concern about possibly doing that, I would say that there is a good faith argument to say if the amounts were paid during the covered period, then it's an eligible payroll cost. So I think you'll probably see people across the board as to how aggressive, so to speak, they decide to be on that point. So just something to keep in mind there. And then lastly, just to point out, Blake mentioned the 75-25 rule. One of the questions until this came out last week was what would happen if you were below 75%. So if you were at 60, did you lose forgiveness entirely? And obviously that's not the case. It just the way the form works now is it just ensures that whatever your forgiveness amount is, at least 75% of that is going to be your payroll cost. So just want to touch on those items. Certifications by the borrowers. You'll recall that there are various certifications that are contained in the original application for a loan. One of those in particular regarding the necessity of the loan has received an enormous amount of focus for the past month or so. There are additional certifications, of course, in the loan forgiveness application. One of those that just to point out is the provision on this slide. You see that there's a statement that the amount for which forgiveness is requested does not exceed 8 weeks worth of 2019 compensation for any owner employee or self-employed person, and then it references essentially the $100,000 cap over the covered period, and that's just something to point out that language regarding an owner employee's compensation being capped is not found anywhere in the CARES Act. And we have had that specific question raised as to whether or not an owner could increase their salary during the 8-week period. What limitations would keep them from doing that? And until last Friday, when this was issued, the only limitation would have been the $100,000 cap. But this language is a certification with the request for forgiveness that the amount we're asking for forgiveness does not include more than 8 weeks worth of compensation. So just keep that in mind as you go through. That actually squares the treatment, or is consistent with the treatment under the interim final rule that dealt with self-employed persons, and so it essentially puts self-employed individuals and an owner-employee on a level playing field. It does raise another question, though, as to what an owner-employee really is. If you had a situation where a borrower entity was owned by, say, 2 other corporations, and if I'm a shareholder of one of those corporations but also an employee of the borrower, am I an owner-employee even though I'm not a direct owner of the borrower? So one more question for the SBA to hopefully give some clarification on. The next slide. We've talked a lot about, there's been a lot of talk about what I just mentioned, which is this certification regarding necessity for the loan. There was clarification, or at least some comfort, from Fact 46, which was issued recently, and it essentially says if you're under $2 million with your affiliates in total loans, then you are deemed to have made the certification in good faith, which gives a lot of people a lot of comfort. There was a question, though, under that fact, and then how forgiveness would work if you had total loans among affiliates above $2 million, but you're one of the types of businesses that receives the waiver of affiliation rules, and the application, or I should say the fact, did not really address that, whether or not you should still count all those, even though they're not treated as affiliates for purposes of the Paycheck Protection Program. This application form seems to clarify that to say that they could, that an individual affiliate, for example, that's under $2 million and that receives waiver under the CARES Act would be eligible for the safe harbor there. There's been a lot of question over the last few months about types of documentation that will be required for forgiveness. The CARES Act addresses it to some extent. The application here outlines documentation specifically as far as what is required. Blake mentioned earlier the two items that are required to be submitted by a borrower to the lender is the calculation form and then the Schedule A. And then that listing also includes various items for the different types of costs. So for payroll documentation, for example, obviously bank account statements in, I would think 99% of cases, borrowers will have their loan funds segregated, which their lender would have required. So it should be an easy track in many cases probably to show funds going from that PPP account to a payroll account and then dispersed to employees. Obviously, payroll tax filings, if they're reported and available during that 8-week period, then those will be included. Unemployment filings, any state filings that are made, those sorts of things. And then payments, health insurance and retirement plan contributions, of course, just receipts and documentation for that as well. On the next slide, full-time equivalent employee documentation. As Blake mentioned, the application has landed us at 40 hours a week and not, there was some talk about 30 hours based on some other provisions related to the CARES Act that apply a 30-hour time period for full-time determination, but it is a 40-hour period that we're looking at here. The documentation schedule in the application does not really tell you what you have to or what you should provide in terms of actual documentation. It just tells you that you need to make the calculation. So timesheets, I mean, any internal records evidencing the number of hours that folks have worked. You would think that a certification, just an internally prepared certification by an officer of the borrower provided to the bank as to the number of employees and their average pay and number of hours during the covered period, you would think that would be adequate. Obviously, for the prior reference periods, there should be adequate documentation for those as well. For non-payroll expenses, documenting those, one of the things that the application points out is that borrowers need to show their lender that they had all of these types of non-payroll items in existence as of February 15th of 2020. So providing a lease agreement, a loan agreement for interest payments, those sorts of things would be important. On the mortgage interest payments, what's referenced in the application are things like an amortization schedule. It references lender account statements from February of 2020, so just documentation of that type. For business and rental and lease payments, the same thing, just current copies of lease agreements. Reference, again, to statements from February 2020, and then utility payments, same thing, just evidencing payment during the covered period and also the look back for the existence as of February 2020. And so we've kind of talked through the mechanics of how forgiveness works and how these determinations work. We have gotten, as I said, some questions that I'll talk about here in a second. But when you step back and look at it, really, you just have to sit down and start walking through the form and the different worksheets to determine what the forgiveness amount will be. And collecting all this information on the front end before you dive into that is the way to go. We thought it would be helpful to kind of talk through some of the just related issues and then some open issues that are still unanswered as we go through this. There was a show on this morning on CNBC regarding proposed fixes for the Paycheck Protection Program, and you've probably heard of some of these. I'm not sure how any of these work within the framework of what we have in front of us now regarding forgiveness. If you end up, for example, extending the program or particularly extending the covered period to 16 weeks, which is something on the table. There was a report yesterday about expanding flexibility for use of funds for personal protective equipment. And then a big issue is relaxation of the 75% payroll requirement, particularly given that so many businesses were shut down and really had no use for employees for a while. Some of the other questions, one of the common questions we've gotten over the last 2 months is, are bonuses eligible as payroll costs? And I think that's a question only in the fact that the definition of payroll costs does not specifically reference bonus. It talks about salary and wage and commission and different things like that. My feeling is that a bonus is a compensation payment that's easily contemplated under the payroll cost definition, even though it's not specifically stated. It should still be okay. We have had clients though that we advise them, if you can make it work, simply increase hourly wage or increase the normal salary payment so that you're not paying a lump sum bonus, so to speak, to ensure that it's eligible. May look a little bit better there. A question has come up about how this idea of curing any reductions in full-time employees or in pay would work if June 30th is part of the covered period. So if someone took out a loan this week, for example, then the June 30th date, which is kind of the cure date, would run be part of the covered period. And so it was intended, I think, as a relief provision post-covered period, given when the law was passed and so forth. But that still remains an open issue. One of the questions I've seen a lot is whether mortgage interest includes a debt that was incurred not to purchase property that secures the loan, but maybe for working capital or whatever, some other purpose. We believe that it would. If you read the plain language in the CARES Act, as long as it's a secured debt, then it should not matter what the loan funds were used for. Next slide. From a timing perspective, the deadline to submit the forgiveness application, there is not a stated time frame for submitting the application. One of the things that we have questions about is if you read the CARES Act and then the first interim final rule, it references this aspect of an advance purchase that banks at the end of or during the 7th week of a covered period on a loan, the bank can go to the SBA and request essentially to be bought out before the end of the 8-week period and that sort of thing. And so how that works, if a advance purchase has occurred, presumably the bank still is the servicer on the debt, even though SBA has purchased it. But so there's some questions about how that would work. The law and the application all is required to be acted on by the lender, not necessarily by the SBA, but it says by the lender in the CARES Act within 60 days of the request. And so what involvement the SBA will have in that process is also a little bit unclear as far as reviewing the application and that sort of thing. You may have noticed in the certification page in the application, there's a statement that the SBA may direct a lender to disapprove the borrower's loan forgiveness application if SBA determines the borrower was ineligible for the loan. And so the question there is, or obvious thought is, just how involved can we expect the SBA to be on reviewing these forgiveness applications and everything else related to a loan to determine eligibility, because that's essentially what they're saying they could deny forgiveness based upon. So that'll be interesting to see as well. The last, go back to the previous one, please. On the SBA review, another question is what happens if, notwithstanding the fact we have this 60-day period, if SBA digs in and starts reviewing a loan forgiveness application, for example, what if that period extends beyond the 6-month date from the date the loan was made? Does a borrower then have to start servicing the loan even though they've not yet gotten a ruling on forgiveness? And just an open question. On next slide. Also, and kind of related to what I said earlier, if a borrower's business was closed because the local government said it had to be, what impact, if any, is there on the 8-week period, on the 75% payroll requirement? There's not anything really right now that would provide any relief for that. As far as eligible utilities, we've had a lot of questions on some of these. It's clear under the interim final rule from April 14th that gas and diesel used in business vehicles is an eligible utility, so that's something to track, obviously. Just the phrase telephone as an eligible utility, we believe there's every indication that would include a landline and mobile phones that employees use. And then internet access, clearly direct access would be included. We've had a lot of questions about cloud storage, and we've talked to SBA folks and talked to our congressman and all, and really have not gotten any comfort one way or the other as to how broadly the term internet access should be interpreted. Another question has been the impact of a sale of a business during the covered period. So, and we have several of those in process right now. The question, do you just look at historic employees of the borrower if there is a change in control transaction? Another part of that would be if you are a seller or if you're representing a seller, what obligations and covenants should you get from the buyer post-closing and during that remaining covered period that they will hold to. As far as the June 30th cure date, whether there are any consequences to reductions in employees or pay after that time period. Again, right now it's kind of a hard and fast date, so it appears that if you make the corrections or the cure, then on June or as of July the 1st, you're free to do whatever you decide to do. But there's kind of an expectation that if an additional interim final rule is issued, then it would address some of those points. And I'll tell you what I'd like to do. We've had, as I said, a handful of emails come in with some questions, and so I'm just going to talk through some of these. You'll see as we go through these, I mean, there are still just some open questions, obviously, that we don't have clear answers to. But the first one that we received, and Blake, you may want to unmute just if you want to jump in or have thoughts on these. The first one is how do we determine average salary or average hourly wage for the salary hourly wage reduction? And if you look through look back at the application form, it refers to an average, but it does not say, as is noted in the question, really, it does not say how you determine the average. One thought I would have would be that the $100,000 cap that SBA has imposed, or that's in the CARES Act and then in the rules, it's applied by taking essentially 8 out of 52 weeks, so 8 52nds or 15.384%. So that essentially the pay during that covered period, that 8-week covered period, represents 15.384% of total pay on an annualized basis, right? And so presumably if someone earned $1,500 per week during the covered period, then that person's average annual salary, as it's referenced in the, I think in the Schedule A worksheet, would be, I came up with $78,000, which is looking at pay over an 8-week period, which $1,500 a week times 8 is $12,000, and then you divide the $12,000 by 15.384% to come up with an average annual salary, or essentially to annualize that amount. That's all I would know to do, just given you're trying to track it and apply it the same way that the SBA appears to be applying the $100,000 cap. So that's just a thought on that. Another question, we normally pay total employer retirement contribution during the time that covers our 8-week period. Can we count the full contribution amount or only 8 weeks? And again, I think it's unclear as to what the SBA's intention is on that. We're certainly comfortable with the portion related to the 8-week period. There's no doubt about that. I think we are comfortable, and most folks at other firms I've talked to are comfortable with a catch-up, for example, on matching contributions. So if you normally match at year-end, we think you're safe matching for the, basically a year-to-date through the end of the 8-week period for 2020. The bigger question comes with profit sharing and those sorts of things we talked about. I think right now at least, we're a little less comfortable with that. but I think there is a good faith argument if it's paid during the covered period that it's, it's a qualifying payroll cost. There's a question about, what does paid or incurred mean? Can we pay even if incurred prior to the covered period? Can we pay after the covered period if incurred during the covered period? So, as Blake went through those earlier, you can pay amounts during the covered period if that were incurred prior to that, because it's amounts paid during the covered period. If a payroll cost is incurred during the covered period but not paid, then you can count it as long as you pay it on the next regular payroll date. So another one is, we elected the alternative payroll covered period. My question is about requesting forgiveness for the health insurance paid by the company, as the bills do not exactly match the selected payrolls. What is the best method here? So this company or borrower will be using the alternative payroll covered period, so it would match up to actual payroll, normal payroll runs that the borrower would have. And so the question is, they have health insurance payments that do not exactly match those dates, so what should they do? Well, the health insurance, first of all, employee health insurance would be a eligible payroll cost, obviously. Then the options are probably to confirm the amounts and actually pay it during the alternative payroll covered period. So even if it was not the actual due date, if you went ahead and prepaid it, for example, then I think that would be safe. The other thought would be, if the amounts are earned during the alternative payroll covered period, then they can be paid on the next payroll date after the end of the covered period. Note that would be paying on the next payroll date, not on the next date that the amount is actually due to the insurance company. And another question, we have a commissioned employee getting a check for May that will put earnings in the covered period over $18,000. And so that would be an annualized amount above $100,000, certainly. This person did not earn over $100,000 in 2019, and we do not know if she will in 2020. Do I use the cap of 100 or the actual total paid during the 8-week period? I would just say the CARES Act definition of payroll costs applies both on the initially, at the front, initially determining the loan amount, and then on the back end for forgiveness. So it's the same definition. The $100,000 annualized amount applies then both on the front end and on the back end in forgiveness. The instructions to the Schedule A worksheet use that same language, just taken out of the CARES Act. So I would say you would use the annualized $100,000 cap, or the cap of $15,384. That's even though, if you look at Table 1 on the worksheet, I think it refers to payments of $100,000 or more during 2019. And the CARES Act itself does not reference a 2019 cap of 100. It's just simply a cap of $100,000 during the covered period. So I would definitely apply the cap, and essentially $15,384 I think will be the maximum on that. I'll tell you, Blake, if you want to take a look at some of the questions, we can just maybe bounce through a few of those. There's several folks have asked for the spreadsheet, and so we will send that out. I think Tabitha has everyone's email address, certainly, so we'll be able to get those out without a problem. There's a question about cell phones counting as utility, and if it's a business cell phone, then it should be a telephone cost. And transportation costs, certainly I have viewed that, Blake, let me know if you have a different thought, but I've viewed that as, if there's a car allowance or something like that, we don't have much in the way of really public transportation like they do in some other parts of the country as far as transportation costs.
Yes, that's correct.
Okay. There's a question, our work week is 37 and a half hours. Do we use that instead of the 40 hours? That's a good question. I have not thought about that. I have to, the application, the instructions on that Schedule A worksheet, it references dividing by 40 as the full-time equivalent. So at least for now, I think that's what you'd have to use. Is health insurance, 401k, et cetera, for owners eligible for loan forgiveness? And yeah, I mean, the answer is yes. The cap of $100,000, for example, does not include those kind of what they call non-cash items, which would be health insurance and contributions. The owner-employee limit that I talked about earlier too, I believe it's a cash compensation restriction essentially. So I think you could go in excess of that limit for an owner-employee with respect to retirement benefits and health insurance and that sort of thing. Can you pay retirement benefits for a self-employed owner or only employees, like a SEP IRA? We had that question came up and tried to find anything specific, and there really was not anything beyond, or that I could locate beyond just the fact that a retirement benefit payment is payroll cost, is a payroll cost, and so I believe the answer would be yes on that.
I think the next question is, if an employer wishes to increase an employee's salary during the 8-week period and then adjust it back down to full amount, count towards forgiveness if it is annualized under $100,000? I would say yes, to the extent this is not like an acceleration of pay. If you're paying them just additional compensation like we talked about before for hazard pay or coming in during the COVID-19 period.
Yeah. There's a question: if we were reaching the end of the period and had not spent the total amount of the loan, can we pay out bonuses? That goes to just the question of whether bonuses are eligible payroll costs. I see no reason why they should not be. I mean, the cap, the $100,000 limit, and then this new limit on pay to owner employees would apply. But and we had that question, and I may have mentioned this, but about an owner employee, essentially, can they receive an increase in pay during this period? And they should be able to, but under the CARES Act. But we have this limitation that's set out in here in the application.
Next question: what happens if an employee worked 60 hours per week on average during the testing period, and then only works an average of 40 hours per week during the fixed 56-day period at the same hourly rate? Could you get penalized and have to repay a portion of the loan because of the 75% limit? I think from the plain reading of the CARES Act and the calculation in the application, the answer would be yes. But recall that as long as this disparity is remedied, so if he's back on a 60-hour average work week prior to June 30th, this penalty should not apply.
Then there's a statement, the AICPA is frequently updating the loan forgiveness calculator. Encourage everyone to use the link. That's a good point, Martha. Yeah. There's a link in the chat room, and I'm sure if you, it's aicpa.org/SBA. So that's a good point. It probably is a kind of a living, breathing document that's being updated. So that would be a good idea just to check it out, everybody. If you didn't catch that or need help, just email us or email Tabitha, and we can certainly make sure you get the most current version. Will interest paid annually due during the forgiveness period count, or must you just use an 8-week portion of the interest payment? If it's due annually, if it's not a prepayment of interest, then I can't think of anything in the Act that would prohibit you from paying, if the annual pay period or payment hit during 8 weeks, and it was accrued interest, then I think it would all apply.
That's right. It just says you can't prepay it. So if it's ordinarily due during that time, my thought would be, as you said, it should be all counted towards that forgivable amount.
Mm. Mm-hmm. With one of the questions, with possible changes to the rules, when should we apply for forgiveness? My expectation is that most borrowers, and I think banks will want this, is that during the 7th week, I think most banks, at least that I've talked to, are going to be heavily in touch and engaged with their borrowers, getting everything ready to apply for forgiveness. So I think it will be happening soon thereafter. But you make a good point with the changes to the rules. I suppose if there was a rule change that occurred that would help a borrower after they'd already submitted an application for forgiveness, I'm sure they would be able to work with their lender to make any necessary modifications, to calculations or whatever it might be. There's a question. The American Bankers Association said the 8-week period begins at date on promissory note, not disbursement. And I don't think that's correct. If you look at the frequently asked questions, and there was a interim final rule issued, I can't remember now, a couple of weeks ago, that addresses that the disbursement date is the beginning of the covered period.
Yeah, it's FAQ number 20.
Okay. The question: we offered the bonus as a hazard pay and broke it up between the 8 weeks, so it wasn't such a large lump sum all at once. Hopefully, this will not come back to bite us. I agree. I mean, I think there's ample support. At least there's certainly a good faith argument that that's the correct position.
The next question: if a business defines full-time work as 35 hours a week, must employees now be paid for 40 hours a week, even though that has never been the measurement of full-time in that business? Based on the way the application has the calculation, I would say you're still a full-time equivalent employee is still determined based on a 40-hour work week.
And those are good questions. Yeah, I do, and we will look to see if there's if there's any nuance to that we could hang our hat on and send it around as an answer, and certainly keep our eyes open if that's addressed by the SBA. Question: how should health insurance paid for a greater than 2% shareholder be applied? Is it considered covered? Should it be added to wages as part of the calculation to the $15,384? What about HSA contributions for greater than 2% shareholders? That's a good question. I haven't had that one posed to us, but my thought would be that the health insurance, the definition of payroll costs is just, it includes obviously a benefit, a health insurance benefit for employees, and it does not distinguish between someone who is an owner or whether or not they're an owner. And so I'd feel comfortable you just treat it the same way you would any other payment for health insurance coverage by including it in payroll costs. And it's excluded under, I think, fact number 7 from this $100,000 cap at the $15,384 amount. So I think it could be included in, that excess could be included also. And the next question. Yeah, go ahead.
Are retirement contributions included in the payroll costs and therefore capped at $100,000 for those who make more than $100,000? I believe the $100,000 limit is just on cash compensation, so the retirement contributions would not count towards that $100,000 cap.
There's a question about, or someone mentioned they emailed a question about self-insured health plans. I may have missed that email, so if you wouldn't mind resending that, you can send it to me or Blake directly, and we can confirm on that. It seems like we had looked into that for another client, and it was covered as a payroll cost. Next question. A company has a loan period beginning April 20th. The first pay date during this period is April 30th. For the pay period, April 10th through the 25th. Is the entire payroll considered eligible payroll costs for PPP loan forgiveness? So the covered period began April 30th. First pay date is, April 20th. First pay date is April 30th. Yes, I mean so you would be paying eligible payroll costs during the covered period, even though part of those costs relate to a pre-covered period time frame. So that's all eligible payroll costs.
The next question: would gas for delivery vehicles for florist delivery and company vehicles be deductible? Yes, I believe that would be a covered utility as gasoline. It's specified in the last interim rule. I think there's two parts to this. For figuring FTEs, if we are going to use the 4 biweekly pay periods for the 8-week period, then we had wanted to include the last 10 days of payroll incurred on the back end after the 4th payroll, but that would be paid in the following month. How would we calculate FTEs on the final 10 days of payroll incurred since the weekends will 10? Okay.
Yeah, I'll have to study on that one, honestly. That's a good question. The question, would you touch on salary? And I guess as far as what is salary, there's not a definition in the Act. I mean, there is a distinction, though, between salary, which I think is just a regular continuing periodic payment, versus an hourly wage, which would be, you work 6 hours, you get paid for 6 hours. You work 8.5, you get paid for 8.5. So that's the only distinction that I think is outlined kind of in the guidance and in the application that we received. So the next one, I'm an owner of a company currently, but most of 2019 worked with a different company. My pay was much different in 19 from working at the other company. How will they calculate the owner's portion of pay to determine how much I should make during this 8-week period? The certification, again, it says that the amount does not exceed 8 weeks worth of 2019 compensation for any owner employee or self-employed individual. And so right now, you'd be capped, I believe, at that amount, although that was with a different employer. So I'm not sure. I haven't seen anything that would have kind of a look back if you were employed with a different employer. I guess one question would be, well, that may be something. If you want to email me separately, I'd be happy to talk to you about that. That's all I have right now on that. If an owner employee worked part-time in the business and became full-time during this period, would the increase in compensation be allowable? I mean, Blake, I think that if this certification holds, then you'd be capped at 8 weeks worth of pay in 2019, right?
That's correct.
Yeah. I think this is what was put up earlier, but would you touch on salary for partners, how to document, and what exactly counts towards salary? When you say partner, if you're talking about a partner in a partnership or an LLC member in a tax partnership, the amounts that would be salary there, I believe if you look at the interim final rule that address partners versus partnerships filing these applications, would be the partner's distributive share of pass-through income and I should say guaranteed payments that the partner would have received. Isn't that right, Blake? I mean, there's not a separate salary payment necessarily to a partner, if we're talking about a partner in a partnership.
Right.
Does health insurance of a more than 2% shareholder include the insurance of a spouse? That there's nothing that addresses that really, unfortunately. Also, what if the insurance is Medicare? Does that count? I mean, if the employer is paying for a health insurance benefit, then I think it would count. Well, folks, those are all the questions that we have. We appreciate everyone joining us today and being available. If any additional guidance, certainly in the form of a interim final rule or frequently asked questions, if they are updated to cover more forgiveness specifics, then we will be sending out information on those. We're available if you have any questions or if we can assist with anything, and we appreciate everybody joining. Thank you.